Welcome back. Now, doubling down on tech investments is bearing fruit for Weaver Fintech. During the interim period, the mail order giant, formerly known as Home Choice, grew its top line by 29% and its bottom line by 45%. A half-year dividend of 140 cents has been declared, reflecting an increase of 47%. Company CEO Sean Wibberley joins us with his assessment of the half-year that was for the group. Sean, thanks so much for your time this afternoon. As mentioned, there double-digit growth across the board. As we get started, take me through some of the biggest contributors to growth that fintech division still seems to be powering through.
Yes, thank you. Very, very pleased with the results. The big growth drivers have been in our payments business that's grown almost 90% from H1 last year to H1 this year. Our lending business is up 30%, our insurance business up 22%, and our retail business also up nicely, double digits at 12%. So across the board, there's been growth, and primarily very strong in the fintech side. And that was towards its momentum we built up over the years, and also it's continued through into the first half.
And talk to me about...
it's been great. The top line's grown, and we've had good cost structures below, so the jaws have opened, and the profit growth at 46%, as you said.
Talk to me further about that growth you are seeing in the fintech division. It does account for about, 98% of profit before tax. While the sector is poised for growth, it is quite competitive. How are you, navigating that landscape?
Yeah, look, so the first part, so the 98% contribution of growth within the group, it's why we've rebranded to Weaver Fintech on the JSE, to better reflect what we are substantially doing at the moment, which is very much a fintech-driven business. And competition, yes, I mean, we've got competition in insurance, in lending, and in the payment space. But, we've got an ecosystem that we really focus on the customer with. We really try and make the UX, the design, the language we use, and the products that we serve up, something that focuses on our largely female customer base. About 2/3 of our customers are female. And we're very proud of how we focus on her and the engagement we're getting. And it's all very evident in the take-up we're getting. We're booking 110,000 customers a month into the fintech ecosystem, and they're converting into revenue and profits at very nice rates.
And on that payments division, yes, there's that pay just now, but you've also introduced the longer-term option, which is pay stretch, right? Talk to me about the kind of uptake you're seeing there.
Yeah, so the Pay Just Now brand is our payments brand. It does the buy now, pay later product, Pay in 3. Very, very strong growth in that product. As I said, we're booking about 110,000 customers a month into BNPL. And then the buy now, pay later product. And then Pay Stretch is our term for our longer products, so paying over 12 months, allowing customers to be able to afford larger ticket items at the point of sale. So any Pay Just Now merchant can now offer BNPL or Pay in 12.
Okay.
And the uptake, we've launched that in October last year. We've booked 47,000 customers onto the product. We have done 140 million in sales. We've been carefully growing this while we learn with our merchants and our customers what's working and refining our user interface. But I'm really excited as to where that product's going to go. And we'll introduce Pay in 6, Pay in 24, and other variations on the term to make the consumer experience and the affordability at the till fit her pocket and her needs at the time.
Within the fintech division, you also touched on this. You also offer loans. What does the collection rates look like? Have you managed to manage defaults as well, if there are any?
Yeah. So, I mean, any lending business has defaults. Our collections rate, so we use the debit check collections mechanism to collect our installments on the lending business and on the Pay Stretch portfolio. And I've seen a nice improvement actually in collections since the back end of last year into this year. We had a small industry change in May with the introduction of registered mandates, or RM. Across the sector, there was a bit of a wobble in the collection space. We've now recovered that. And now, just 4% of our collections are now on RM, and the vast majority then done on debit check. So I'm very pleased with how we are collecting digitally and getting good strike rates and payment rates from our customers.
Does this also speak to, I guess, an improved environment for the consumer, considering that we have seen lower interest rates and lower inflation as well?
Yes, I do think with the easing of interest rates, there's some lessening of the burden on the consumer's pocket and in the market. We've certainly been focusing in the last 12 months or so on our existing customers, so product progressing and term extensions and limit increases to our well-paying existing customers. That's been a strategic decision to improve overall the quality of the book as we bring out these new products, and then we'll ease back into garnering more cross-sells from new customers into the pay stretch and the lending side of the business. But we've seen the consumer being quite resilient at this time.
And that resilient consumer also being seen in your retail business, right? You talk of that division also delivering double-digit growth, up about 12%. Talk to me about what's been playing out on that front.
Yeah, on the retail business, they've had a strong push in the last recent few years in opening up touch and feel showrooms. So we've just marked our 50th showroom last week, and we're looking to grow that to 100 by 2027. And this is where the traditional customer at a distance who used to purchase primarily off a catalog or via the call center is now going to showrooms to touch and feel the product and order in store with a sort of click and collect option where she would come back 2 days later and collect the goods in store. That's really working well for us. It's booking about half of our customers are actually brand new customers in those stores, which is great for acquisition. They tend to be more buying in cash rather than on credit, which is better for our cash metrics. And overall, that strategy is really playing out nicely for our customer base. So now we've got showrooms, we have a call center, and we have our website and quite a growing area, which is web chat or chat commerce. Seeing a lot of transactions now happening via WhatsApp. Customers are interacting in a dialogue fashion, seeing the product and ordering via the chat platform, and that's quite an exciting growth vector for the retail business.
And it's so interesting to see that, a number of your customers are still going to the showrooms, even though we are still seeing the digital boom, right? But then again, that comes into play when they do place their orders because they still use your platforms.
Yeah, exactly. It's an omni-channel experience. Customers can browse the products on our website or on the app, or indeed in a dialogue on WhatsApp. But they can also go and see them in the real world. And ultimately, the products end up in the real world in any event, right?
Yeah.
You buy the blanket, you receive it. Clearly, if you're buying it in store, the return rates are much, much lower because the customers have seen the product, they've touched it, they know what they're getting. Whereas at a distance, customers can return the goods. So we see better metrics and efficiencies in the showroom because of that. And it's nice to just have that unified omni-channel experience where she can choose how she shops.
And I touched on Weaver doubling down on tech investments. And, I can imagine where the kind of platform that you actually have to double down on those investments. Walk me through that and perhaps talk to me about also integrating AI tools into it.
Yeah, so, as a fintech business, everything we do is on a technology stack, right? And we've got the Pages Now business, the FinChoice business, which are the customer-facing brands. We're investing a lot in data platforms to integrate transactional data and customer data to better serve up personalization of offers to customers. We are also looking at the data in terms of how customers are transacting on the payment side, to use that data to provide insights back to our merchants, to allow them to create, learn about what to offer to different types of customers, to access new types of customers within our ecosystem. We have well over 3 million customers in the ecosystem on fintech. And so we've now revamped our platform in terms of the shopping destination. If you go to Pages Now, you'll see that it's changed now. It's much more of a shopping experience, more relevance and personalization to help you find products and merchants, then draw through to those merchants, convert through the funnel, and then transact using one of our payment products. It really is a nice virtuous circle with the merchant, the customer, and ourselves are all benefiting from from the ecosystem.
Sean, thank you so much for your time and just taking us through the 6 months that was for the group. That was Weaver Fintech CEO Sean Wibberley.